term. And to talk about the same with his analysis is joining George Thomas, Fund Manager, Equity Quantum AMC. George, thank you for giving your time to ET Now. Good afternoon, Mansi this side. It's a pleasure talking to you this afternoon.
Thanks for having me.
George, this is the right time if we actually are planning to create and draw our portfolios, because see, for the short term, one can say that the market can be range bound because of the uncertainties that are coming from the global markets. We also have uncertainties on the back of the tariff jitters which we see. No sort of negotiation or sort of deal is being coming at present, which is absolute, which we can think of. And at the same time, there is the energy basket. Across the globe, a lot of uncertainties. But the domestic market, we have a lot of positives as well. And domestic markets at present are shining on the back of the domestic triggers. Let's say the second half of the earnings season, the latest GST rate rationalization, onset of monsoon. So do you think this range-bound momentum right now is the right time to invest in the markets? And if so, what should the investors think and how should they plan their portfolios?
The YTD returns were non single-digit returns, and of course, the recent earnings season which has come out has not shown very clear green shoots in terms of earnings returning to a market to a great extent. But the point to note is one, the tariff and negotiation, whatever is happening, India being a consumption-driven economy, the impact is likely to be much low. It will be very minimal than what the broader, expectation. So that's one point, And of course, as you pointed out, the domestic factors have been fairly good. The inflation is moderate. There have been interest rate cuts which have happened. And there are steps taken by the government in terms of boosting consumption in multiple ways. So with markets being range bound and earnings showing signs of recovery, if you look at the 2-year forward upside potential, which we track very closely, these are indicating reasonable levels so that investors can expect reasonable returns in the medium term. Although in the near term is very guess, but from a medium term perspective, it looks like a very good time to construct your long-term portfolio.
Mr. George, I think there is some technical issue, and while we fix that, in the meantime, let's also pay attention how markets are faring currently. It is continuing with the downtrend as we have opened since morning, and Nifty currently down 162 points. If you see, the advanced decline ratio is currently in favor of declines, and as far as Nifty stocks are concerned, it is being led by Grasim, which is down more than 2%, followed by Adani Enterprises, Asian Paints, all down around 2% as we speak, and even Hero MotoCorp, which has been performing in last 3 to 4 days, is down today around 2% as well. JSW Steel, Ultratech, HCL Tech, IT sector is also not performing in the today's trade. But bucking the trend, there are a few stocks, as we discussed earlier also. Vodafone is performing well in today's market on the back of the news that government intervention might be there in the telecom sector. Also, pay attention to Z Entertainment, which is up in trade today around 5% after the downtrend which was visible last week. But shifting focus to Rajiv Batra, who is head of Asia Equity Strategies at JP Morgan, and he shares his top sectoral picks from across the sectors. Let's listen into his rationale behind it.
We are overweight on financials, consumer staples, discretionary except auto. We are overweight on healthcare, hospitals, and power and defense. Where we are underweight on is IT, pharma, and materials to overweight. But on the export side, IT, pharma are the key concerns for us.
So that's the global view, and we are constantly keeping an eye on the global front as well as the domestic front. But coming back to the market, and as you clearly see, there are a few pockets and spaces, scripts which are doing positive in trades, even in the lackluster and volatile market today. Take a look at Aditya Birla Fashion, around 7% upsurge since the start of the day. The stock is performing. Have a look at the JM Financial. It's around 4% up in the Nifty 500 category. One such stock which is doing really good on literally literally every trading session of the day. In the Nifty next category, it's Divis Laboratories, Godrej Consumer and HAL as well as Siemens, which are doing really positive in trade. But then let's move ahead and talk about the brokerage reports, because these days the brokerage reports and the ones which come in are giving a lot of impact to the related sectors and the stocks. Morgan Stanley has given an overweight stance on diversified FMCG space script ITC, cutting the target price for the stock. Varun is here with all the projections they have come out with for the stock. Varun, what is the brokerage's take on ITC?
Well, definitely. So Morgan Stanley has an overweight call on ITC, but they have cut the price target from 500 rupees to 469 rupees. They are rolling forward the estimates to FY28. Also for the bull case, they have reduced the target from 695 to 651, and for the bear case, they have reduced the target from 309 to 294 rupees now. Now they say for FY26 and 27, the overall top line is higher by around 1 to 2%, largely owing to the agri-business, but the earnings they have lowered by around 3 to 4%, and the scenario values have been reduced by around 5 to 7%. They expect the overall volume growth to be around 5% going ahead versus the 4% that was expected earlier, but the margins could see pressure. In fact, they say that the overall margins could be lower by around 175 to 250 basis point, owing to the margin cuts across segments, and also it reflects the overall margin decline in FY25 as well. Also, they expect the overall CAGR growth to be around 9% to 11% in revenue, EBITDA and profit for FY25 and FY28. So overall growth would be good, the volume growth would be good, but yes, the margins could come under pressure for ITC and also the other FMCG companies, and that's the reason they have cut the price target on ITC from 500 rupees to 469 rupees now.
Thanks, Varun. We also have back with us George Thomas. George, we were discussing about the texture of the market currently, and if you see about sectors, even Quantum AMC is having big exposure in banks, including State Bank of India, Kotak Mahindra Bank. What is your view on banking sector per se, and should one still invest in the banking space?
Yeah, hi. See, from a bank's perspective, of course, with the interest rate cuts, you would see some bit of moderation in net interest margins in the near term, which the street is aware and has already factored in. So when we look at the credit cost environment, the NPS cycles, it continues to be benign in the broader segment. And therefore, we are quite optimistic. And from a valuation perspective, banks make sense, but we have a preference more towards private sector banks, where we feel the upside is slightly on a higher side. So that's where, and our sense is even credit growth can pick up from where we are as the economy kind of gains momentum.
That's right. George, while investing in market, the style and strategy one utilizes matters to a large extent, whether one should go with the large caps, the blue chips, or should also have the broader market, mid cap, small cap scripts into their portfolio. Whether one should just go with the domestic theme or also themes which are connected to the global front, like the IT space. Having said so, what are the core investment philosophy that you consider? If you can just give a quick know-how to our viewers.
Yeah, sure. So we are quite sensitive to valuations in general, and therefore, so we are slightly large cap tilted at this point, but even the small cap fund is quite cognizant of valuations, and therefore in a volatile environment or wherever when market perceives risk and when the high valuation stocks takes a beating, we tend to stand out. The second important pillar for us is we have very clear focus on liquidity. So we give a lot of focus in terms of the average daily trading volume, and that kind of varies from strategy to strategy. But what that helps is when the risk is more pronounced in the market, or when the liquidity kind of gets scarce in certain pockets, those are times when our set of stocks kind of stand out. And the third most important pillar is our importance for governance standards and the quality of stocks, and that kind of ensures that our holdings kind of stay in good stead for the longer term. Whereas if you have investments in poorly governed companies or where the governance standards are weaker, there are possibilities that the investors might see shocks at some point in time. So these are some of the key tenets in which we invest. From a sectoral perspective, we have quite a our largest weight is into financials, which is a mix of banks and some of the savings related themes like insurance and asset management companies. And we have a sizable weight even in the IT sector. And historically, what we have seen is when there is a transition happening, like the current phase where we are seeing a lot of adoption of Gen AI and stuff, the initial phase, the Indian IT companies may not fare well because a lot of their exposure is in terms of implementation and integration with the current, the existing software environments. So as the adoption kind of gains scale, which we expect to happen in a few quarters from now, that's where our sense is, the IT sector should start outperforming to a large extent. But from a valuation perspective, the large cap IT bucket looks reasonable at this point.
George, also I want to get your view on consumption stocks with the festive season starting next week. How should investors prepare for that? Should they wait for the final outcome of GST, or you think that right time to invest is now onwards?
So we have a reasonable exposure towards consumer discretionary, which is a mix of two-wheelers and a consumer durable name. So in some of those names, we feel there is a decent amount of potential in terms of volume revival, and therefore so if you look at the recent numbers, the volumes have been slightly on a weaker side, but as and when the government measures gets coming into the sector and the implementation happens, that could provide an added impetus to the volume growth. But even with a reasonable normalized volume growth assumption, some of the two-wheeler names and durable names, which you can see in some of our portfolios, those have decent upside at this point in time. But the point is, investors should always be forward-looking, and you should not wait for the event to happen, because at that point in time, the valuations may not be in favor and your returns may not be quite attractive at that point.
George, on that note, we'll let you go. Thank you so much for your views and analysis on the markets and helping our viewers devise a strategy for the markets at present. Thank you and have a nice day and a great weekend to you.